Shall we just have a conversation about Schedule K-1 instructions, how to fill out a K-1 and file it? I think we should. So I want you to stick around till the end of today's conversation. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. I hope you are doing fantastic today. I hope you are doing great. I'm doing fantastic. I'm doing superb. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. Today's conversation will revolve around Schedule K-1. What is it? What is Schedule K-1? Let's just talk about it first. Schedule K-1 is a schedule of IRS Form 1065 or 1120S. We also have Schedule K-1 of Form 1041, but this is not really, we're not talking about that here. But Schedule K-1 is a schedule of IRS Form 1065 or 1120 that members of a business partnership or an S corporation use to report their share of a partnership's profits, losses, deductions, and credits to the IRS. So basically, partnerships are so-called pass-through entities because they let the profits or losses of their business flow through, right? Flow through to the owners without paying corporate taxes. So Schedule K-1 is an important part of the partnership tax return process consequently, because it helps you and the IRS figure out how big your piece of the pie is in the partnership and how much of the partnership's income or losses you should actually report on your personal tax return. And so if you need to have you want to find a sample K-1 tax form, you can go to the IRS website. You can have a copy of a Schedule K-1 Form 1065 or Schedule K-1 Form 1120S. Remember that the IRS will not accept your personal tax return on Form 1040 if it does not have a Schedule K-1 attached. Very important. Now, having said that, who has to file Schedule K-1? So if you're part of a general partnership, limited partnership, limited liability partnership, or you are an LLC that has elected to be taxed as a partnership, then you need to file Schedule K-1. You need to do at least two things during tax season. Make sure your partnership has filed a partnership tax return on Tax Form 1065, and you also need to file your own individual Schedule 1. So if you're not sure whether you are in a partnership, here are a few telltale signs to let you know. If you co-own a business with one or more person, but that business is not incorporated, right? Because remember though, it's very important. You don't need to file any forms with your state to start a partnership. All you need is a verbal agreement, right? So if you've also signed the partnership agreement and registered the partnership with the states, then I think you are in a partnership. If your company is an LLC and has not decided to be taxed as a corporation this year, then yes, you are in a partnership. So if the company hasn't filed Form 8832, then you are in a partnership. There are actually two more forms that the IRS calls Schedule 1. I spoke about that earlier, right? So you have Schedule K-1 of Form 1041, and this must be filed by beneficiaries of trusts or estates. And then you have Schedule K-1 of Form 1120S, which must be filed by the owners of S corporations. So although these forms are similar, in today's show, we're actually focusing on Form 1120S and Form 1065. So speaking about the 1065 or 1120S, what is K-1 distribution? You hear these words all the time. What is K-1's distribution? The profits of a partnership are distributed according to the partnership agreement created by each of the partners. And in other words, each partnership decides for itself how it will distribute earnings. Even if a partnership brought in tons of cash, the partners could still agree to reinvest that money back into the business and therefore not report any income on individual K-1s. So it's really, at the end of the day, it's really up to the discretion of the partners. And people sometimes confuse K1 versus Form 1099. Schedule K1 is how individuals in a partnership report their share of the profit or loss. 1099s, on the other hand, are forms that other businesses will send to your partnership if they paid you more than $600 during the tax year. So when you add up the total income from all the 1099s, you will get most, but not all, of the income earned by the partnership during the year. You can then use that information to file your Form 1065 or 1120S on behalf of the partnership or the S corporation. In other words, what I'm trying to say here is that K1 is still relevant to individuals in the partnership, while 1099s are relevant to the partnership as a whole, right? So you have this sort of distinction of totality versus individual, right? So you have the partnership or the S corp and the individual. And how does self-employment tax work for K1? Now, Schedule K1, as you can see on the screen right now, I'm just showing this to you right now for Form 1065, as well as the link to the IRS website. So Schedule K1 will actually show, it will show you your self-employment earnings from the partnership or LLC you are a member of, or the S corp you are the owner of. So you'll need to pay self-employment tax on that amount. This is very important. The thing here is that your self-employment tax amount will depend upon depend on the amount you've made. Remember that K1 is just a vehicle for the IRS to double check on the amount that you're reporting to the agency as your income. In other words, the IRS uses the K1 to reconcile the amount of income or loss you claimed on your personal tax return rather. So the agency is reconciling what the amount you put on your return to the amount that the company has filed with the agency. So now let's kind of dig a little deeper here. How do you read a K1 Form 1065? Again, 1065, the K1 Form 1065 is slightly different from a K1 1120, but there are, I think, 80%. They are 80% similar. But right now I want to focus on 1065 because that's what the vast majority of people file for every year. All right. So most of the info you'll need to complete your Schedule K1 will come from the income and expenses section of Form 1065. So beyond beyond ordinary business income or losses, Schedule K1 also captures things like real estate income, bond interest, royalties and dividends. You have capital gains, you have foreign transactions, and any other payments that you might have received as part of your involvement in the partnership. So remember that you'll need that information on hand to fill out the form. So if you're sitting there and ready to fill out the form, you got to have all that info. Let's dig into the info. So you have Part 1. We actually showed you on the screen right now. You have Part 1, information about the partnership. And item A, you need to enter your partnership's employer identification number. Item B, you will need to enter your partnership's contact information here. Item C, you need to identify which IRS filing center you are sending Form 1065 or Form 1120S to. So if you're not really sure where you're sending your form, you want to go to the IRS website to find out. Item D, you need to check this box if your partnership is a publicly traded partnership with shares that are bought and sold on an established securities market. And on Part 2, information about the partner, item E, you need to enter your taxpayer identification number, your TIN, which can be either your social security number, individual taxpayer identification number, or employer identification number. And item F to I, you need to enter your contact information, your partner status, and whether you are a foreign or domestic partner here. Now, item J, here you will report your share of the partnership's profits, losses, and capital. So generally speaking here, this amount are based on the business's partnership agreement. So if you enter the partnership after the beginning of the year's reporting period, you will enter the percentages that apply to you when you entered in the beginning column. So if you left the partnership before the end of the reporting period, you will put the percentages that apply to you when you left in the ending column, very important. And so you have item K. So here you'll enter your share of the partnership's liabilities or debts, sorted by liability type. It can be recourse, qualified non-recourse, and recourse. So you have recourse, qualified non-recourse, and non-recourse. So a recourse debt typically is a debt that holds the borrower personally liable, which means a lender can go after your property, while other debts is considered non-recourse. So for more information, we have a show about non-recourse versus recourse, and we'll put a link in the description. And in item L, you will tell the IRS how much capital you had in the business at the beginning of the tax year, how much you put in during the year, whether your share of capital decreased or increased, any withdrawals or distributions you made, and how much capital you entered the year with. And in item M, you need to check yes if you contributed property with a built-in gain or loss to the partnership this year. Remember that the IRS defines a built-in gain or loss as the difference between the fair market value of the property and your adjusted basis in the property at the time it was contributed into the partnership. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section. We're still having a conversation about Schedule K-1 instruction, and I'm just going through a Schedule K-1 for Form 1065 right now. And part 3, we have the partner's share of current year income, deductions, credits, and other items. And so in this section, you will report basically your share of the partnership's income, loss, deductions, credits, and any other money you might have received in connection with your stake in the partnership. So to fill out boxes 11 and boxes 13 through 20, you will need to use the codes located on page 2 of the Schedule K-1 form. So box 1, you have ordinary business income or loss. So you need to enter your share of the ordinary income or loss from trade or business activities of the partnership this year there. Box 2, you have net rental real estate income or loss. Box 3, you have other net rental income or loss. Here you will report your share of any other rental income you earned from the partnership. Box 4, you have guaranteed payments, right? So those are payments you receive from the partnership. So these are payments that the partnership made to you without regard to the partnership's income, usually in exchange for services or for the use of capital. Box number 5, you have interest income. So you report interest income you received or earned during the year from things like bonds, certificates of deposits, bank accounts. Box 6, you have dividends. So you record any ordinary, qualified, and dividend equivalent payments you receive from the partnerships. Remember that dividends are payments that people get for holding shares in a company. All right. Box 7, you have royalties. So here you will report any royalties you received during your dealings with the partnership. Box 8, you have net short-term capital gain or loss. Box 9, A through C, you have other capital gains or losses. Box 10, you have net section 1231 gain or loss. This is very important because section 1231, just to quickly explain here, section 1231 transactions involve the sale or exchange of property, leaseholds, cattle and horses, timber, coal or iron ore, and other property. Box 11, you have other income or loss. Box 12, you have section 179 deduction. So if you're claiming the section 179 deduction, you'll report your share of that deduction here. We actually did an entire show on section 179. So you want to double check that. Box 13, you have other deductions. Box 14, you have self-employment earnings or losses. Box 15, you have credits. Box 16, you have foreign transactions. So if you do any business overseas, you want to use this section to report your share of any income or losses you sustained in any foreign transactions you participated in. Box 17, you have alternative minimum tax, AMT items, right? Box 18, you have tax exempt income and non-deductible expenses. Box 19, you have the distributions. So if you received any distributions in the form of cash, marketable securities, or property, you put it there. In box 20, you have other information. So it is very important to understand all the different items that I just spoke about. Let's talk about when are K1 schedules K1 due. So you must issue your shareholders or partners their Schedule K1 by the date your primary tax form, either Form 1065 or Form 1120S, is due. All right. So generally, it's the 15th day of the third month after your tax year ended. So for most calendar year businesses with tax years ending December 31st, that date will be March 15th. Or if your tax year ends September 30th, your due date will be December 15th. So if that date is a Saturday, Sunday, or a legal holiday, the form is due on the next business day. And now there is one exception for Form 1120S filers. So if you ended your company's S corporation status during the year and switched to a C corporation, guess what? You will need to file Form 1120S and send out Schedule K1s by the due date of your C Corp's shorter year. So because your partners or shareholders need the Schedule K1 to file their taxes, you should submit this form promptly. And this is very important because the IRS is very adamant at making sure people comply with the law. And the agency will fine you $270 per shareholder or partners if you are late or you provide incorrect information. A paper copy can be provided or electronic copies may be issued. It really depends upon the situation. Electronic versions generally require the partner's written consent to receive their K1. And the due date for Form 1065 is usually, as I said earlier, March 15, unless you file a 6-month extension using Form 7004. March 15 is also the deadline for partnerships to issue individual Schedule K1 to each partner, because they actually need that. They will need that to file with their own tax return. All right, very, very important. So those are things you need to think about. And one thing I also need to add here: if your business is a pass-through entity like a partnership, an S corporation, or LLC, taxed as a partnership or S corp, you'll have to fill out not only a Schedule K1, but you also have to make sure that the partners acknowledge. You have to have your partners sign a form that shows that they acknowledge receipt of their respective schedules K1. Very important. The IRS double checks on that. So now let's just talk about which kind of schedule do you need. Do you need Schedule K1 Form 1065 or Schedule K1 1120S? So depending on your business type, there are a few different Schedule K1s forms out there. There are actually two. There are more than two, but yeah, the right one for your business depends on the primary tax form your company fills out. So if you are a partnership filing Form 1065, then you fill out Schedule K1 Form 1065. If you are an S corporation with shareholders, then you fill out Schedule K1 Form 1120S. We actually have the two forms on the screen. You can see them. So we have Form 1065, the K1, and then we have K1 Form 1120S. So here are the differences between the two forms. So the Schedule K1 is designed for partnerships, and it tracks each partner's share of the partnership's income, gains, losses, deductions, credits, and liabilities. And for the Schedule K1 Form 1120, it is designed for S corporations with shareholders, and it tracks the form tracks, or the schedule tracks, each shareholder's percentage of income, gains, losses, deductions, and credits. And you may also have to fill out a state-specific Schedule K1 or equivalent form. So you really want to talk to your CPA or EA or tax lawyer to see if this applies to you. And there are also other types of Schedule K1s. I spoke about that already. You have the 1041 for beneficiaries and trust, but you also have Form 8655 for reporting with respect to foreign partnerships. We're not going into much details here because it's really it falls under another show. And the cool thing here is that Form 1120S and 1065, and I'm showing this to you right now again on the screen. It's a one-pager. 1120S is a one-pager, very simple, very straightforward. If you are familiar with the forms yourself, go ahead and fill it out yourself. If not, you want to enlist the help of a tax professional. And same thing for 1065, very easy. Each form has 3 sections, whether we're talking about 1120S or 1065. So each form has 3 sections. So part 1 basically asks for information about your company. Part 2 asks for information about the partner or shareholder. So you'll see that this section is much longer in Schedule K-1 Form 1065 because the IRS wants a lot more information about partners than shareholders. And part 3 is where you detail the partner or shareholder's share of income, gains, losses, deductions, and credits. So this is very important. Now let's really, what else do partners or shareholders need to know about the Schedule K-1? I've spoke a lot about all the things you need to know about Schedule K-1. Let's now sort of wrap up today's show and talk about a few other things you need to know about. You need to know. So you don't want your partners or shareholders to be confused when they get their Schedule K-1s, especially if this is their first one, right? So here are a few important things to tell them. Number 1, it is okay if some sections are empty. You don't have to fill out the whole form. It is okay. If some sections are empty, it's fine. So depending on your business activities, there may be a couple of fields filled in. You'll still get a Schedule K-1 if your business had losses. So K-1s, as you have certainly understood, is not just for profit for good times, right? No. So Schedule K-1s are sent out every year, even if the company had a loss. And do not file your taxes until you get your Schedule K-1. So this form is absolutely essential to filing your personal taxes. So you want to tell your partners to hold on to filing their personal taxes until they get their Schedule K-1s. All right, folks, this is it for today's conversation. I really appreciate your help. Thank you so much for your attention. And I was just talking to you today about the Schedule K-1 instructions. And I explained to you what a K-1 is, where can you find a simple K-1 tax form, who has to file Schedule K-1, what is K-1 distribution, how is K-1 different from 1099, how does self-employment tax work for K-1, how do you read a K-1 Form 1065, when are K-1s due, which Schedule K-1 do you need, Form 1065 or Form 1120S, and what else do your partners or shareholders need to know about the Schedule K-1. Thank you again for your attention. Happy filing. I will see you next time. But until then, remember, stay marvelous.